Hello Val investors, thank you for joining me. Today I want to talk about Asana. So Asana is a productivity tool, and Asana is the new kid on the block, and there's a lot of promising stuff coming out of its quarterly results, including its guidance. But before we touch on that, don't forget to check out my marketplace. It's called Deep Value Returns on Seeking Alpha. I'm having a price hike in January 21 after the strong performance that we've had in 2020. So you're welcome to do a free trial and to see if that suits you. And if you come in before January, you'll come in before the price hike. So there was a lot of things that were interesting in Asana's results. So Asana's guidance came in a bit stronger than people expected by 4%. So it's coming out that Q4 is going to come in at 45% year-over-year growth rates. So that's the biggest part of the bullish thesis right there, is that you have this company that's growing quite fast. Another thing that is worth considering is that the rate of growth is rapidly fizzling out. So this time last year, Asana was growing at high 75% year over year, and we've just seen it really just slow right down. So that's one thing that I think is worthwhile considering, is that I'm questioning in my mind what's next year going to look like. So this is something that you want to consider. Another thing that I think is worth looking at is about Asana's non-GAAP operating profit margins, okay? So this is after the stock-based comp gets added back. This is after direct listing costs get added back. So this is really the best case scenario. And we can see there's a progression towards it getting worse. Rather than it actually improving, it's getting worse. So as a case in point, last year's Q4 2020, their fiscal Q4 operating margins were negative 49% year over year, negative 49%. This year, it's guided in the best case to be negative 57%. So it's really unprofitable. On a rule of 40, this comes out at approximately minus 12. To give you a reference point, Slack came in just last quarter at positive 39%. If you remember, rule of 40 is supposed to be something that measures the balance between revenue growth rates and profitability. So in this instance, Asana is doing quite badly, and this is the reason why I'm not getting really involved here. On the other hand, there is something quite positive here. So you can see that there's a sequential increase in the number of customers uptaking its platform, so that's really interesting. And you can see that the rate at which customers are growing sequentially is coming up. So you can see that in Q1 21 it was 3%, and then in Q3 21 it's 9% year over year, 9% sequential growth. So this is very attractive. More and more customers are coming on board, and this is the vitality of the business. So obviously, this is like that kind of economic flywheel, so that's positive, and that's something that you might want to keep in mind also. Another thing that I think is quite interesting here, and obviously this is why the stock just popped close to 17% after hours, is because it's not particularly expensive, okay? So by my estimations, if you take in 158 million of shares outstanding that they're going to guide for Q4, you're approximately paying 5.2 billion. So the market cap is 5.2 billion. By my estimates, assuming that it grows by 35% next year, the business might make about 298 million, just under 300 million in revenues annualized. So at that point, investors are paying 17x multiple for next year's sales. In the SaaS business, that's not particularly expensive. You're most likely going to be paying 20 multiple for most SaaS stocks. If you compare that with what Slack got acquired at 21 multiple. So, but you have to remember that before the rumors about Slack getting acquired by Salesforce were coming out, Slack was being priced at 19 times forward multiple, and had been pretty stagnant in 2020 when all tech stocks were just going vertically up. SaaS was kind of just trading around. I think it was up about 19% before the rumors came out. So that's kind of like the limit of what people are willing to pay. And Slack is a very attractive platform, and Slack is a very sticky platform. And again, we talked about the fact that Slack's rule of 40 was at 39%, which is really kind of optimal. So if we take that as a reference point and you're paying 17 times multiple here, it's a bit of a discount, and it wouldn't surprise me entirely to see that maybe Asana could get repriced at approximately $46 per share over the next 6 months or so. So as always, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. See you next time. Bye.